Hey traders, this is Ron Haydad, Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll lead off here with the SPY, which I have a long-term bullish position in. We've been bouncing back and forth above the 20-day EMA in red, even the 50-day SMA in orange, and we got ourselves back inside this box. Now, on Friday, we finished near the highs of the day, and we've now put in a swing low pretty equal to the last little one at the end of May. At the end of the day, if I draw this for you, we're still in a trading range. You can see how I can bring this over, right? So we're still in this range, but now we're pushing the upper end of that range. If we can close over those highs, which are right around 278, not that far away, then we could challenge these highs up here. So yes, we're in a trading range, but after Friday's move, it's looking bullish as we walk into this week. Now, if I show you the IWM, which is the Russell 2000, we broke the 20-day in red back on June 27th, got down near the 50-day, and now we're bouncing. The selling volume was greater. You can see it's higher than the buying volume over here. So the down days, bigger volume, up days, smaller volume. But bottom line, we're almost back testing new all-time highs. And the 5-day in blue has crossed up through the 20-day in red. That's a technical buy signal on the Russell. So it's also looking bullish into this week. The Qs, pretty similar to the SPY in the sense that they were just bouncing around, they just popped up. But the Qs, they did something different this past week. They were holding the 50-day in orange. Now, again, we're challenging. We're within $2 of the all-time highs here on the Qs. And if I go to the diamonds, which is the weakest, the DIA remains the weakest. We were only up a little bit on Friday. In fact, if I really zoom in here, we're still below the 20-day EMA in red and the 50-day in orange. This is the worst performing index. So if we subtract the diamonds looking into this week, it is slightly bullish. One other thing here, we can look at the VIX. With the markets pushing higher, you can guess that the VIX is pushing lower, and that's exactly what is happening. VIX is down to 13.37. Now, sticking with the NASDAQ theme, because it is looking pretty good right now on the daily chart, Google, you can see how it just popped up on Friday. Target gap fill, then the previous highs. If we go to something like an Adobe, right back above the 20-day, target back up to the previous highs. How about Facebook the last 2 days? I don't know if you guys saw it, but nice little move Thursday. Friday, close is 203.23. That is a new all-time closing high on Facebook. How about that? Apple had a nice little pop on Friday. Its target previous highs right around 194, 195. And then Netflix, take a peek at this one, NFLX, held the 20-day. Even during the little pullback, would not give up that red line. So target is right back up there. And the closing highs right now are 416.76. We're basically $8.50 away. And if you trade Netflix, you know that's literally just 1 day away. Now, a stock that's been a bit of a roller coaster is Tesla. There's been different reports out there, positive and negative, like always, which makes this one hard to trade from a swing trading perspective. It doesn't follow moving averages very well. Even credit spreads can be troublesome with this stock. We ripped up here. There's a quick 30-40 point rise right in here. Then it comes down, it tries to bounce, and then bearish engulfing, and now we're pushing down. The target is going to be down here around 280 right now. Short term, it's bearish. If you are trading Tesla, I would definitely make sure to keep reading the headlines. There was something out there about debt issue and other things. Normally, I would say, go with the long-term view, but if some of these reports are right, this company could be in for a world of hurt. Yet the stock price doesn't even reflect that. Just very, very short term, it's down, 10 or 20%, and that's it. And it continues to be overall range bound. If I go back, let's say 2 years on Tesla, you can see the rip, then the dump. You're still in this big old trading range, if you want to call it that. So just FYI on Tesla. Now, how about a stock we don't look at very much, which is Coke? I'm going to go into a 1-year view, and you can see the head and shoulders, the inverted head and shoulders. Take your pick on left shoulders. We break down below multiple months of support, come right back up, run into the 200-day in June, just sort of like we did in April. and like we did in March, and like we did in February. And then on Thursday, we closed at new near-term highs since the February sell-off. The target for Coke is up there 47.5, so just under 10% higher here on KO. How about utilities? American Electric and Power. Once we cleared the high from April, we've tacked on about another $1.50. Target 75, 76, and this has been straight up since the double bottom formed on February. It's following right now the 5-day EMA in blue really well. And if you trade different utility stocks, you'll notice that sometimes that 5-day or that 8-day really can be a fantastic day-to-day trailing stop. And here's the mothership, if you will, the XLU. Utilities never got down to that low, and I'm sorry, it never got down to test the low from February. We got close, about $1, and now it's 2, just shooting up. In fact, if I zoom in closer, you can see here that since we started moving, we've literally had one down day. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15 out of 16 days it's finished higher, ballpark. So if I come down here and zoom out, where's the target? Up there near 55, only maybe, $2, $3 higher, but it just shows how these utilities are doing well, including the staple stocks that I highlighted in Thursday's video. And then last but not least is Fitbit for momentum type trading again, and always in a virtual trading account, never real money. Fitbit pull back, nice little bull flag, popped up on Friday. The only thing that I think is missing would be volume. Volume wasn't that much of a big spike, but nonetheless, the target's up there just north of 7.5, 15% or so higher. A stop for something like this, I would either use Friday's intraday low or come right down here to maybe 650 and try to catch these lows in here. That's it, folks. Wish you guys a fantastic week ahead. Stay cool, and we'll see you in Monday's video. Take care.